let's also try and figure out what's happening to real estate, because the housing market has had its fair share of turmoil while the larger organized players make inroads of late. Prices have also moderated, but that doesn't mean it's become affordable across the country. Knight Frank recently came out with a survey based on affordability and average apartment sizes, which shows that the average apartment size has also shrunk. Is it because builders have turned focus to affordable housing? Well, lots of things to talk about. Let's try and put some of these into perspective. Gulam Zia, Executive Director at Knight Frank, joins us right now on the show. Gulam, good having you. Thanks so much for joining in. Neeraj here. Very interesting note, Gulam, put out by you. I just want to start off with whether you believe that the prima facie reason why the size of the units, and not necessarily the pricing, but the size of the units having gone down across major metros, save for two, is a result of developers by and large focusing on affordable housing.
Yes, indeed. That's exactly what is the conclusion out of this graph that you're referring to. The shrinkage of size in any case has been historically the most used weapon under any developer's armory. Whenever the prices would tend to start shooting up, developer would typically start shrinking the sizes to make the apartment appear affordable. However, in last couple of years, when the last government gave the mantra of housing for all by 2022, under lots of those schemes like CLSS credit link, subsidy schemes, etc., making affordable housing was actually incentivized by government for the first time after a long period. So that was also one of the reasons why developers went back to their tool of shrinking the apartment sizes to make it appear more affordable. So you are absolutely right. Shrinking of the size is definitely a reason why the housing prices are looking affordable right now.
Okay. And while the units would have come off right now, I was looking at this other chart that you guys, or the data that you've put out, which speaks about how in a lot of key markets like Mumbai, NCR, Hyderabad, etc., the affordability, the house price to income ratio maybe changed a little bit, but not too dramatically.
At least in the case of Mumbai, it has come down dramatically. If you look at the chart itself that you're referring to, Mumbai about 4 to 5 years back was actually upwards of 11 on that index, which has come down to 7. Like 4.5 is actually the benchmark, where above 4.5 we believe is unaffordable and below 4.5 it is affordable. Mumbai was at 11, which is absolutely crazy, and that number in last 3 to 4 years has come down to 7, which is, while still on the slightly unaffordable side, but still very close to 4.5. The other cities, comparison to Mumbai, most of the other cities were even earlier close to 6, which are not too far away from affordability, and have now come to 5. But a few of these cities have actually gone way below the affordability limit. Whether you talk about Pune or Ahmedabad and even Kolkata, there the current ratings are, current indices are standing at 3, which is way below affordability. That simply means that these are the cities which have huge affordable housing stock available. So just to add to what you were saying earlier, Mumbai has seen a dramatic fall from 11 to 7. That means Mumbai, which is always known as the most unaffordable city, at last is seemingly affordable for majority of its users.
Okay. However, with the house price to income ratio for certain cities like Mumbai, as you said, improved, and the size of the units coming down as well, it's not resulted in big sales numbers, right? Selectively within pockets, select developers doing well. At large, you still see the real estate community, even in the Mumbai region, being under stress.
You're absolutely right. The sale volumes are still under duress. Ever since 2011, we have continuously seen the volume sliding down. Till last year, it had come down by almost about 38% compared to where the 2011 numbers were. While last year we saw a small improvement in the numbers, but to me that is still too early to predict that we are back on the recovery path and that everything is going to be falling in place now. You're right, we still don't have strong signals from market. to substantiate that the volumes are back on track. So you're right, in spite of whatever is happening, the buyer is not yet budging, is not yet willing to sign that dotted line and come back in horse to start buying apartment the way they used to do in 2011. So perhaps we may have to watch. You have to really wait for much longer than what we anticipated. So even current year is not giving any much respite to the developers from the side of sales improvement.
Gulam, it might be difficult to mention names out here, but wondering, have you guys done any kind of study about what markets would see developers who are in need of funds not necessarily getting those funds and therefore coming under problem? Because the common belief is that there are a bunch of developers needing a lot of immediate funding, maybe at higher rates over the course of the next 6 to 12 months, since the main source of funding, which was the NBFC space, is looking like drying up quite strongly, or has dried up quite strongly.
Which is a fact. NBFC crisis is not yet blown over. We still are seeing things, the cracks are still appearing. So we want to believe that funding situation for developers is very, very tough. And the way we look at it, the most sacrosanct, the most sacred kind of funding for the developer is ultimately a buyer's money coming into the business, which is still elusive, which is still not happening.
Right.
So in the interim, the stress levels are only increasing. Now your question is, who are the ones? Well, it will be tough to really name a few of them, but it's evident that majority, many of them actually are waiting in the wings to really declare themselves as on the other side of the business.
Yeah, sorry, that was going to be my question. I mentioned that you will not be able to give names, but would you reckon that we have reached a time period where in the next 6 to 12 months, we might see builders folding up shop?
Well, it has happened in past as well. While it's not really, going out there and announcing that they're folding shops, but many of them have found suitors, bigger developers with deeper pockets to rescue them from the difficult positions that they were in. So it has been happening in last 2 years for sure. Now going forward, your question is, would we really see people going belly up like the way we perhaps saw in NCR region when quite a few of them actually landed up in NCLT and lots of those tribunals? Well, it may take some time before Mumbai reaches that situation, but if the situation continues the way it is today, well, even that is not too far off.
Actually, somebody who goes to NCLT quite regularly tells me that amongst the biggest sector, one of the two biggest sectors is real estate. A number of cases out there for projects or otherwise. But Gulam, thank you so much for joining in for this quick interaction. Appreciate your time and giving us that context about what's happening to sizes and prices both.